Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Monday, Halloween, the 31st of October, 2022, about 3:23 p.m. Central Time. Now, I do head back to Chicago. Actually, I start leaving the forest, as I like to call it, in California. I am in a forest, believe me. The closest city is an hour and a half away. We have a small convenience store, about 15 minutes, and that's it. You're in a forest. And it's been quite an experience. I love it. Pretty as can be, I will say that. Okay, so let's talk about what we've got. Now I go into what I call in my analysis a quieter period for chart recommendations. Why? Because you don't know what the reaction is going to be Wednesday at 1 o'clock when the FOMC meeting comes out. But I must tell you, it's going to be a reaction that hangs on what's going to happen on Friday. Because no matter what you think, the Fed's got to say, the chair, that while they're seeing certain parts of the economy weaken, you're seeing that in the economic data reports that are coming out. You're not necessarily seeing it in earnings, by the way. More of the S&P companies and other companies that are still reporting are doing better than worse. But what you are looking for is first the jobs report. And you get that Friday morning. Is it going to be weak? Is it going to be strong? Is it going to hold up? What's it going to do? All the Fed can do is respond to the data. They need to see a crack in the armor. We're seeing small cracks definitely happen in daily reports. You had today Chicago, its activity index. You've had Dallas. These are not strong. So we're starting to back off the way that you want to see that. But it's got to translate into price, CPI. And it's got to break down into jobs weakening. I am seeing something that bothered me. I'm writing about it in tonight's report. And yes, while I'm out of town, I've been putting out the morning subscriber videos and writing at least one report a day. And I am concerned. I'm looking at how many restaurants are in arrears in America, according to one of the major associations. And they're saying 49%. They're saying 37% of small businesses in America are in rent arrears, which is up 7% this month. So if you're in rent arrears, one of the things that does for me is you're not going out and hiring a lot of new people. So you backtrack that in and you say, you know, we should be seeing something show up in weakness in these markets. That's what I'm thinking. Now, the school of thought is you're getting this from some of the big names, banks that are coming out and telling you what they think, that the moment we see that it's an all clear from the Fed, in other words, jobs fall, CPI falls, the market can rally a quick 10%. Okay. I know what they're saying. You still got to show me the data. Okay. Does any of that bother me? No, because you know that I'm looking for a year-end rally, but you can get tripped up along the way if you get too strong of jobs data and CPI yet. So let's take a look, if we could, at some of these charts and get a feel for where we're at. First, on a weekly chart of the S&P, all you've done is rally back up to the 18-day average. So it's been a bear market rally that is stopping again towards that 18-day average of closes. You can see how the market's acting right through here. It's been a labored move to the upside, but it's been a definitive move. And ever since you had the washout on the chart, literally right through here, the market has been headed to the upside. When we look at the swing line, you have a pattern where the market is easily making higher highs, higher lows. That's an uptrend. The market has stayed over the 18-day average since back here. It got over it and stayed over it right through here. And that date was October 18th, which is 13 days ago. It got up to the next resistance point in moving averages, which is the 100-day moving average, ran into resistance there with the combination of the upper Bollinger Band. Never lose sight of that combination. It's often a stopping point. It is not a go short point. It is a spot to liquidate money, to take, if you're long, to take money off the table and protect yourself at that point. But what the market has going for it is its embedding. So when I look at this part of the market, this gets exciting. Let me just take that off for you. But if you start looking, you need both numbers, the way I teach embedding, over 80 for several days in a row. And you got it. You can see that. So until it's lost, I say that After we get through the FOMC, I'm looking to be a buyer. Would I pay attention to the chart points in front of it? Let me teach you that too. No. Why? Because if you get a surprise, the chart's based on a certain period of assumptions that the market's making, and surprises can change those assumptions very quickly. In the NASDAQ, you're overbought in an uptrend, unable so far to get up to the upper Bollinger Band, supports back at the 18-day average of closes, but in an uptrend, and you're at in the micro mini Dow, in the Dow itself, an embedded reading at the 200-day average of closes with the Bollinger Band. For me, that's enough. That doesn't mean that the market can't go higher. It's enough. And if you were sitting next to me and I'd have my elbow ready, I'd give it to you in the rib cage and say, out you go. You got to take money off the table, and we wait and see the report. You're overbought trying to embed in the micro mini Russell, not there yet, and in the Dow, in the VIX. I think the pros for the first time went short over here. I think they wrote some puts trying to get back to the 18-day average. I'm going to repeat again. For my theory, I don't believe that I would take trades like that in front of an FOMC meeting, a one that the market is putting importance on. I walk away and I just say, you know, I know what's the norm, but I know how to walk away from that. And if I miss it, I miss it. You're still bearish in the bond market. You're staying under the 18-day average of closes, as you can see right through here. Let me get this right there. You've got the lower highs, lower lows. You've corrected an oversold market. You're still bearish. When you come to the 10-year notes, you're neutral. You got a lower low and a higher high. You're just sitting here flat as can be. The dollar has been in a bear camp, but it hit its downside targets, the lower band, and it's bounced very nicely. The upside resistance is right here. If the market gets a Fed that sounds more dovish, and if the jobs data breaks, I don't think the dollar goes up. I think the dollar does go down, but I wait to see what I'm going to get. I don't have to be the first kid on the block. You get killed being the first guy. You have to guess it right, and you have to guess that the market reaction is going to be the way you thought. I so often have gotten it right in the guessing what the Fed's going to do or not do, and wrong in the market reaction. I wait. In the eurocurrency, you got up to the upper Bollinger Band and you ran out of momentum. So why would you want to do anything up there? I think you just pass on that trade completely. When I come back over here, you got up to the upper band. You can see that. And you ran into resistance in the pound. So you're getting a bit of a correction, and you're turning your momentum down in the market. You see that? Not the place to be. In Bitcoin, I am friendly to market. I've been telling my traders that I question if we haven't actually made a real low in this market. I went through it over the weekend on the weekly charts as well. Then we get to now Brent versus WTI, and it's time to move to the January differences. Today was the last trading day for December Brent. And as you can see, in the January, you have fallen back to the 18-day average. The trend is up. The resistance are these moving averages right through here. You have fought them. You didn't make it to the upper band. I think the trade is friendly this market. You'd have to break through this low right over here in order to be in negative territory at 89.17. And you are working off an overbought condition. You did get overbought. Now you got readings at 67. They were higher. When we come to December WTI, there's still time to trade this one. The market got up right to what I told you. I had told you last week, if you get a rally, I didn't know if you'd rally there or not, to the 200-day, the 100-day, that's a strong combination, and the Bollinger Band. Well, you couldn't get to the Bollinger Band, but you got to those. And if you take a look, you got to 89.79, you're $3 lower, $4 lower. You got to 85.30. Come on, that's a big break. You learn to play those. Is the trend still up? Yes. I want to see what the market's going to offer to the dollar so we have an idea about this. Now, in heating oil, 2 days ago, you had gotten up to the upper Bollinger Band. You know what I say. If you've taken my course, you know that's where you're coming out. The first hit of a Bollinger Band, and you're not embedded. You're taking the whole position off. Last, in nat gas, did I not tell you you don't want to play the short side of this while you're waiting for the first cold weather? I happen to be in California, Northern California, and we wake up to all fog and 32 degrees in the morning, and then by the afternoon it's 65. But Chicago isn't far different from those weather patterns right now. You're starting to get to where the heat's being turned on from everybody, and we're using what we've got. Where this market will have a better chance of coming alive is when we get the Freeport, Texas port exporting again, especially back to normal, but it's not going to do that right away. And of course, Maryland, there was a port there that had maintenance work, and that's reopened from what I understand it. So you're starting to get some of the bids in this. There's a lot more gas rigs coming out as well. But you hear me keep talking about Bollinger Bands and the slow stochastic tied together. My slow stochastic readings, I realize, look different than yours. But when you're a paid subscriber, you buy my course, I'll give you the new formula. And that formula will change it so that it looks just like mine. I definitely use a different formula. I don't use the standard one. I found out years ago a better way to do it, and it works perfectly the way I want it to for my use, with the idea of when you lose an embedded reading, what happens in the market. And remember, no setup. The ones I teach included. Nothing works 100% of the time. Is this a pretty strong one? I'd call it that. I'm Ira Epstein. You have a great day. Thanks for watching, and I will do my best to be on with you tomorrow. Take care.
Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.